Broadcast is now starting. All attendees are in listen-only mode.
Hello, and welcome to today's Boston College webinar of Philanthropy and Your Reunion, Information on Gift Planning Strategies. We are so glad that you registered for the webinar and are looking forward to seeing many of you at Reunion. My name is Joel Carlton Geeson, and I'm here with Denise Heffron. We are both Associate Directors in Boston College's Office of Gift Planning. Throughout the webinar, you are invited to submit questions by typing them into the question box in the webinar dashboard. Your questions will be sent directly to us and will only be viewable by us. At the end of the webinar, we will answer as many of your questions as possible. We are also recording this webinar and it will be available online soon. Before we start, I'm sure you've heard about the new tax legislation out of Washington, D.C. that will affect us in 2018. Well, this affects charitable contributions too. Denise and I are not going to cover all the new tax changes in depth today. We at the Office of Gift Planning are organizing an upcoming webinar for you and other alumni to hear from experts at BC on the overall effects of the new plan. We also encourage you to consult your tax and legal advisors to discuss any potential tax advantages for you. We're going to have a couple of poll questions today to help us understand our audience. Denise, would you like to share the first poll question?
Thank you, Joel, and welcome everyone. Today's first poll question is, tell us why you're here today. The choices are you here to learn about how I can give more this year, to learn about more complicated ways to support BC, to learn how I can give gifts through my estate, to learn how I can make a gift to support my reunion, or are you here for other reasons? Please select one answer. Okay, so now we'll close the poll. Okay, it looks like several people are here to see how they can give through their estate, and others want to know how to make a gift to support my reunion. So hopefully we will cover all of that today. First, I would like to tell you a little bit about our Office of Gift Planning. Our office is located at the Cadogan Alumni Center on the Brighton campus at 2121 Commonwealth Avenue. There are 4 of us on the gift planning team, and our goal is to give alumni a variety of ways to support BC's mission while achieving their philanthropic and financial goals. As you probably can imagine, everyone's financial situation and focus is quite different. Today, our plan is to talk with you about the many ways and methods in which you can support BC during your reunion year. Our goal is that 100% of our reunion alumni give this year. As Joel mentioned, please feel free to send any questions that you have during the presentation. We have also included our contact information on the last slide in case you think of something after the presentation or you would like to talk to us about your particular situation. You might think to yourself, how can my gift impact BC? Well, I am here today to tell you that every gift makes a difference, and the collective gift of thousands of donors has an enormous impact on BC. Gifts of all sizes help the university to increase financial aid, implement need-blind admissions, hire new faculty and some of the most promising young scholars, and expand volunteer and service opportunities for our students. An easy way to make an impact at BC is to give to the BC Fund. The BC Fund is our annual giving program, which provides the university with resources that can be used immediately to meet the most pressing needs and opportunities at that time. Or you can designate your gift to a specific area. Some examples are financial aid, athletics, or one of our 9 schools or individual programs. Some people choose to dedicate their gift in honor of a BC student, a faculty member, or someone who made a difference in their life. Other people like to give a gift in memory of a loved one that has passed. These are just a few of the ways to make a difference for BC Eagles. As a donor, there are many tax benefits you can potentially receive when making gifts to BC. I'm going to talk about a few of them now, and we will highlight many of these scenarios throughout the webinar. When making a gift, you may be able to receive a charitable deduction if you itemize on your tax filing. With some types of gifts, you may be able to lower your taxable income. If you use appreciated long-term capital gain properties, an example would be stock, you can potentially avoid or lower capital gains taxes. I will actually discuss appreciated assets in a little more detail on the next slide. Although the federal estate tax has expanded because of the new laws, many states, including Massachusetts, have an estate tax on lower amounts, which may allow for the opportunity to reduce your taxable estate. This next slide is telling us about simple ways to give during reunion. We want to highlight some of the easiest ways to do this. If you would like to give during your reunion, you can use cash or credit cards. You can donate easily through our online form at www.bc.edu/give. When you go to this page, you will be able to enter your gift amount, credit card information, and any other gift information that is needed. If you're the type of person who would rather speak to someone, you can talk to anyone on our BC staff on our toll-free number during the hours of 9 to 5. Or maybe you're the type that likes to mail in your donation. That's probably what I would do. You can find information on additional ways to give at www.bc.edu alumni support. For some folks, it may be easier to give to BC over time. You have the option of setting up monthly reoccurring gifts, which actually combines the ease of installments with the convenience of automatic renewal. Your gift of $10 or $20 a month can make a huge impact to BC when added up throughout the year. You can also give annually. Many alumni choose to give at calendar end or just prior to BC's fiscal year end, which is on May 31st. BC can also accept pledges for up to 5 years for a gift. If you make a pledge now, your total will actually count in your reunion totals. You may want to consider giving appreciated assets to make your gift. Some examples of appreciated assets are stocks, bonds, real estate, intangible personal property. We have actually had some donors gift artwork and collections and books, which are housed at the McMullen Museum of Art right here on campus. If you are interested in gifting appreciated assets, please let us know. We're happy to speak with you anytime about your specific goals and situation. We do, however, always recommend that you consult with your legal and financial advisors to discuss the best gift scenario for you. Stock gifts are another great way to give to BC. When making a gift of stock, you want to make sure that you've owned the stock for at least 1 year. Often the stock has grown in value over time. When donating stock, you will receive a charitable deduction on the full amount of the gift, regardless of what you originally paid for it. Since you'll actually be transferring the gift in kind, capital gains taxes do not apply to the transfer. Therefore, you will not need to pay capital gains taxes on the difference in value. This example illustrates the difference between a cash gift of $10,000 and a stock gift of $10,000. As you can see, for the stock gift, you can save $3,700 on income taxes and $1,904 on capital gain taxes. The total tax savings on this particular stock gift would be $5,604. If you were to give cash, the total tax savings would be $3,700. Either option is a great and easy way to make a gift during your reunion. Another example is that we recently heard from a donor who purchased a number of stock shares in 1997. He paid $13 per share, and now the stock is valued at approximately $85 per share. In order to avoid paying capital gains tax on the difference, he is in the process of actually transferring the stock to BC. Next, I'd like to talk to you about another option that many of you can take advantage of right now, the charitable IRA rollover. The charitable IRA rollover provision was made permanent in 2016 and is a great option for donors age 70 and a half or older. If you have someone in your household of this age, they are actually eligible to do this. And if not, it is definitely something to consider for the future. Donors receive a number of potential benefits by using a charitable IRA rollover. First, it satisfies the required minimum distribution. It can also allow donors to avoid federal and, in many cases, state income taxes. Now that the standard deductions have risen with the new tax legislation, those who do not itemize will still benefit by donating through an IRA rollover because it actually lowers taxable income. And of course, donating through a charitable IRA rollover will support your class reunion goals. One thing that I want to note at this time is that you are not eligible to receive a charitable deduction for this type of gift because you already received the tax benefit when you funded the IRA. But again, it will lower your overall taxable income. Now I will tell you about some additional things you should know about the IRA rollover. As I mentioned on the last slide, you must be at least 70.5 years of age or older when the gift is made. Your total charitable distributions cannot exceed $100,000 per taxpayer each year. Gifts can only be made from a traditional or a Roth IRA. And most importantly, if you do plan on doing this, the donor must direct the IRA administrator to transfer the distribution directly from the IRA account to Boston College. Joel and I are happy to provide additional information, and we also have template letters to help you with this process. Okay, now we are going to ask another poll question. All right, we would like to know, how familiar are you with the term plan giving? The choices are extremely familiar or very familiar, somewhat familiar, I've heard of plan giving before, or I've never heard of plan giving. Please choose one answer. Okay, hopefully everyone has voted. I'm just waiting for the results. Okay, looks like it's a 50-50 split. Some are very familiar with plan giving and some are somewhat familiar with plan giving, so that's great. I'm going to turn it over now and Joel will tell you all about plan giving.
Thank you, Denise. So as she just said, we're going to be talking a little bit about planned gifts now. You may have heard about the terms planned giving, gift planning, and legacy giving, and weren't sure what they meant. Well, these terms are all interchangeable and illustrate the different ways for alumni to support BC. Simply, a planned gift is a contribution that is arranged now to support a charity in the future. There are many reasons why donors can benefit by making a planned gift. I'm glad to share that with you today. But I'll be speaking about three most common types of planned gifts: bequests, gift annuities, and charitable remainder unit trusts. Before I do, though, I want to tell you about BC's first bequest. You may have heard about BC's Shaw Society. Well, it was created to honor Father Joseph Coolidge Shaw, who passed away in 1851 and donated life insurance of $4,000, which would be worth about $125,000 today, and approximately 1,800 books from his personal library to help found BC. Think about how many hundreds of thousands of lives his gifts have touched and will continue to touch. We named our Plan Giving Society after Father Shaw as a way to recognize him and celebrate people who are strengthening BC through their estate and planned gifts. I like to tell a story because it's a great example of how bequests can have a ripple effect long after we're gone. We have nearly 2,900 Shaw Society members, and we would like to see this grow to 5,000 in coming years. Shaw members receive benefits including our newsletter, invitations to special events like athletic events, and this April we're going to be doing a showing of Peter and the Starcatcher, and special recognition in university honor rolls. We hope you'll consider it. Now, I'd like to talk with you about a few types of planned gifts. The first are bequests, or sometimes called estate gifts. Bequests are property or money that is promised to a person or organization after death. You probably already have some bequests going to family members or other heirs. You can also include charitable bequests to BC and your other favorite charities. So why are bequests popular for supporting charities? Well, first, anyone can do it. I just told the story of Father Shaw and his gifts. Bequests are flexible and can fit everyone's circumstances. Bequests are simple to do. They can be as easy as adding a few sentences or listing BC as a beneficiary. Actually, many of these you can do with little assistance. You have the option to make them irrevocable and revocable. Irrevocable means that it's locked in, while revocable means that you can change your mind at a later date. So you have options. If you're concerned about your finances during retirement, a bequest can allow you to retain control of your assets. Then your gift can go to BC after you do not need your resources any longer. Even with the new tax legislation from Washington, D.C., bequests can still provide potential tax advantages. And finally, a bequest can provide greater gift to BC than you might otherwise think possible. Many people pass away with much larger estates than they expect. and you can support BC with this. So how do you make a bequest? Well, the first way is through a will or trust. If you haven't thought about writing a will yet, or just haven't gotten around to it, now might be a good time. Many people will write or update their will after a life event like a marriage, birth of a child or grandchild, or purchase of a home, but really, everyone should have a will. It will state your intentions to your family and friends, especially helping them during a difficult time. And if you don't have one, well then the government will just make those decisions for you. You can use a will or living trust to direct who will receive your possessions. It's easy to include a provision for BC or other charities if you wish to do so. We are happy to provide suggested language for you to share with your attorney or advisor, and we can also work with you to craft language that reflects your wishes to make a lasting difference at BC. As you get older and circumstances change, it's easy to update your will or even add an amendment or codicil at any time if you'd like to do it then. There are a number of ways that you can support BC that are even more simple than writing a will or living trust. A number of financial vehicles allow you to designate a beneficiary upon your death. This would allow it to bypass a probate process and go directly to your beneficiary. Retirement accounts, life insurance plans, checking, savings, or other accounts that are payable or transferable on death, and donor-advised funds are just some of the most common and easiest ways to support BC. To do this, you just need to contact your administrator and fill out a simple form. We have sample letters to your plan administrators that can help you with this. Simplicity is a benefit of these types of gifts. Well, here's a flexibility that I mentioned earlier for bequests. There are many ways you can support BC through a bequest. You can give a specific amount of money. You can give a specific property like stock, real estate, or artwork. You can give a percentage of your estate, retirement plan, or life insurance. You can give a residual or a remainder part of your estate. For instance, one alumnus who is celebrating his 50th reunion this year has a number of specific gifts in his trust, but he has named all the rest of his estate to go support financial aid at BC. You can also name BC as a contingent beneficiary. One alumnus who I've talked with recently has one child who recently graduated from college, another in college, and a senior in high school. He and his wife are concerned about their debt if something should happen to them, but he would like to include BC as a beneficiary of his retirement plan. I recommended that he might consider naming BC as a contingency beneficiary, and that way his wife and children could be taken care of if something unfortunate would happen to him. Then later, after their children do not need to have the safety of his retirement account or even life insurance, he could name BC as a primary beneficiary. He liked that idea. If you decide to include BC as a contingent beneficiary, you would also still be considered a Shaw Society member. BC wants to celebrate our bequest donors, so in addition to the Shaw Society, BC has a policy to recognize the full face value of estate commitments for donors and/or their spouses who are 60 years or older. This means that BC will credit you now for making a gift later. It's simple to do. All you have to do is fill out a short form that shares with us some information about your intentions. And to be clear, this form is non-binding to your estate or heirs. Even if you do not want to receive recognition, by documenting your estate commitment, you'll be helping the Shaw Society to grow. These intentions are counted in our fundraising totals and show long-term alumni support for BC. Others see this and also want to participate. Everyone wants to back a winner, and you can help make this happen. The second type of planned gift that I'll discuss today are called life income gifts. These are gifts made during a lifetime that provide an income to donor and/or beneficiaries. The two most common types are charitable gift annuities and charitable remainder unit trusts. These are a great way to support the future of BC's mission and can assure you an income for life while potentially reducing capital gains, income, and estate taxes. BC works with State Street Global Advisors to manage life income gifts. Let me give you a brief example of both. Here is an example of a charitable gift annuity. In short, a donor transfers cash or securities to BC. They receive an income tax deduction, and it may reduce their capital gains tax. BC pays a fixed amount each year to them or to anyone they name as a beneficiary for life. Typically, a portion of these payments is tax-free. When the gift annuity ends, its remaining principal passes to BC. In this example, a donor who, well, let's call him Jim, is 70 years old. He gives a $25,000 gift to BC to fund a gift annuity. Because of Jim's age, you'll see that he'll receive a 5.1% annuity for an immediate payment of $1,275 per year for life and an income tax deduction of $10,486. This example shows a gift annuity for one beneficiary, but charitable gift annuities can have up to 2 beneficiaries, and neither has to be a donor. Last year, I helped one alumnus who was contributing his third CGA. He did it for each of the last 3 reunion years, and the older he got, the higher the amount he received in fixed payments. CGAs are determined by the age of the beneficiary, and this can be helpful for younger donors who want to give one to support parents, grandparents, or others. CGAs can be funded by cash, but it can also be helpful to fund it with appreciated securities too. This can allow a donor to spread capital gains over the life of the annuity rather than having to pay them in 1 year. Here we are taking the previous example if Jim were to give cash versus give a stock with a 50% cost basis. The total annuity payment is the same, but you can see that the capital gains can be spread out over the life of the CGA, while part of it is tax-free and part of it is ordinary income. If he gave a cash gift to fund the CGA, the annuity payment would have a blend of tax-free and ordinary income. Donors have the option of choosing when they want to start receiving the income from gift annuities. The most common type is receiving income immediately. But another option is to defer payment of the charitable gift annuity to the future. Although you're deferring it to a future date, you still receive an immediate tax deduction, but you'll have higher payment rates. Here's an example of how a deferred gift annuity can work. A donor who, we'll call her Sally, is 65 years old and is interested in funding a gift annuity with a $25,000 donation. Since she could start the gift annuity anytime, here are just 3 of her many options. First, she can take an immediate payment for a 4.7% annuity and receive an annual income of $1,175 and an estimated charitable deduction of $9,332. If she decided to defer it for 5 years and start receiving payments when she turns 70 years old, she would get a 6% annuity and receive an annual income of $1,500 and an estimated charitable tax deduction of $11,687. If she decided to defer it another 5 years or 10 years to start receiving payments when she turns 75 years old, she would get an 8% annuity and receive an annual income of $2,000 and an estimated charitable tax deduction of more than $14,000. This could be a good option for donors who want to make a gift now and are looking for additional future retirement income. A second type of life income gift is a charitable remainder trust. It's similar to a charitable gift annuity, but the main difference is that while a gift annuity has a fixed annual income, the annual income for a remainder trust is variable. In short, a donor transfers cash, securities, real estate, or potentially other appreciated assets to an individually managed trust. They receive an income tax deduction, and they may also eliminate capital gains tax on transfer of property to trust. During the lifetime of the trust, the variable income is based on a fixed percentage of the net fair market value of the trust assets as revalued each year. When the trust ends, the remaining principal passes to BC. Okay, there are likely a number of you out there who just thought, what did he say? Well, it might be easier to explain this with an example. In this example, a donor who we'll call Paul is 55 years old and gives a $100,000 gift to BC to fund a 5% charitable remainder unit trust for his lifetime. Paul will receive an immediate tax deduction of $31,967 and a payment of $5,000 in his first year. The trust assets are in part invested for growth, so there's an opportunity for increased income over time. However, income after the first year will depend on annual investment performance. So each of the years that follow, Paul will receive 5% of the net fair market value of the trust from that year. When the trust ends, in this case at the end of Paul's lifetime, the remaining principal passes to BC. So hopefully that makes a little more sense. The next page has a simple chart to explain differences between the charitable gift annuity and the charitable remainder trust. I would like to point out a few of these. You'll notice that gift annuities can have up to 2 beneficiaries, typically a donor and spouse, but we also have alumni who have named siblings or other loved ones as beneficiaries. For those of you who are younger, you might consider this for parents or grandparents that I mentioned earlier. Trusts can have more beneficiaries than 2. Gift annuities can be funded only with cash or appreciated securities, while trusts can be funded additionally with property like real estate or artwork. I'm helping one alumnus right now who is planning to liquidate a property so that at least part of it will fund a charitable remainder unit trust. Donors can add more money into their charitable remainder unit trust. Because gift annuity payment rates are determined by the age of the donor and the date of the gift, additional funds cannot be added to it. But we have a large number of alumni who donate multiple gift annuities, and their rates have risen as they get older. And the minimum gift requirement for gift annuities are $25,000, while the charitable remainder trusts are $100,000. I'm now going to pass it back to Denise to close the presentation.
Thank you, Joel. Okay, on this next slide, Joel and I included our contact information. This is what we look like. If you have any questions after this webinar, please feel free to reach out to us at any time. We are totally here to help you and happy to do so. We would be glad to share with you some sample language for wills or provide personalized calculations if you're interested in doing a charitable gift annuity or a charitable remainder trust. We can run the calculations and show you what it would look like today. And now we are going to open this up to questions. So if you have any questions, please submit them and we will answer them. Okay, it looks like we do have one question. Can I do more than one gift annuity? And the answer is yes, you can. We actually have several donors who have done more than one. In fact, I actually just worked with a donor in December who did their 6th gift annuity. So definitely that is something that can be done at any time. Thank you.
I see we have another question here. I have designated BC as a beneficiary in one of our retirement plans. Where is the best place to indicate the intended use of that gift, i.e. BC will receive a % of that plan, but we would want to specify to BC which area department would receive that gift. Well, that is a very good question. The information that, the way that you note that BC is going to be a beneficiary doesn't have enough space with your plan administrator to actually many times designate more information than just the university's name. So we actually recommend that you attach a letter that goes along with it to your plan administrator and a copy to us that would allow you to specify which area department you would like to receive the gift. I have templates that I'll be glad to send you a copy of the letter that you can send to them and have your plan administrator attach it to your retirement plan and then send a copy to us so we can put it in your file here, making sure that the university will be glad to direct your monies that way. Thank you for that question.
Okay, it looks like somebody is interested in giving shares of ExxonMobil to BC and they want to know how to do that. It's pretty easy. You actually would work with your broker first to figure out how many shares you would like to transfer. And then you would also need to provide your broker with our transfer instructions, which can be found on our actual website, or if you call our office, we are happy to provide them to you in writing. It is always best to let our office know what you're planning on sending, what shares you're planning on sending so that we can match up the shares and make sure that you get the proper gift acknowledgement.
Okay, we have another question here. What is your minimum level to set up an endowed fund scholarship? We have for endowed scholarship, for a named endowed scholarship, the minimum is $250,000. There are, an endowed financial aid, for an endowed scholarship, you would actually have a specific student. You'll be able to give a preference for where your scholarship would go to, and you'd have the opportunity to meet that student. You would receive annual reports about the student, a letter from the student, and also reports on your fund. There are something called an endowed financial aid fund, though, that that's the minimum for that is $100,000, and for that your gift your gift every year would go to fund financial aid generally. You would actually still receive annual reports about your financial aid fund. It would be a named fund after you, but you wouldn't actually have a preference on who it would be directed to. It would go to support financial aid generally at BC, but you'd still attend, special events for that we do for the financial aid donors. So if there's also a way of including that into your bequest, your will, your trust. We can work with you on language on that, especially because you need to be creative when it comes to putting things in your will, since we want you all to live a long time. And Denise and I would be happy to help you with that language. Thank you.
Okay, it looks like another question came in. How does a pledge over a few years count during reunion? Okay, that one's easy. The entire pledge actually counts for your reunion year. So that's a good question.
Another question we have here: as part of the class of 1998, I don't have an estate plan yet. What is the easiest type of bequest? Well, one thing I recommend for younger donors is, beneficiary designations are some of the easiest. Many people have a retirement account or life insurance through the work. All you need to do is contact your plan's administrator to name BC as a beneficiary. We have some information that can help you with this.
Okay, it looks like, will the slides be available? Yes, we are actually planning on sending out the slides after the presentation, and we will also be putting them on the website at some point, and we're happy to share that information as well. Does anyone else have any more questions? Just wanted to give people a chance. If
that looks like it.
Okay. Well, thank you to all who submitted questions today, and thank you for joining our webinar. We hope that all of you will take away the information from the webinar to help you to be more philanthropically minded in your life. And please reach out to our BC Advancement Office or directly to Joel and me with any questions. We are happy to help, and we look forward to seeing you at the reunion, which is scheduled for the weekend of June 1st through the 3rd. There will be more information to come from our alumni office on how to register for reunion and a list of the calendar of events. I also wanted to mention the reunion website is located at www.edu/reunion. Thank you so much for joining us, and goodbye from all of us at Boston College.